Well, in the market for a $150,000 electric supercar? Well, BYD's new car may be for you.
And Tesla is still the dominant player. They continue to be the dominant player. There are some other names, particularly coming out of China when you start thinking Li Auto and XPeng, and some of those names have done a little bit more okay, but it's regional.
Favor downside with competition. So for me, it's shorting into resistance and then waiting for a bigger pullback out. You know, something where they flush maybe Tesla down to 100 again before I start to really accumulate on the long side.
All that and more. So let's get to it. Tesla stock is up in the pre-market almost 0.5%, sitting at 209.64. For the week, however, Tesla is down a little over 3%. For the month, Tesla down almost 18%. Needless to say, it's been a rocky 2024 for TSLA. Until I start seeing Tesla closing higher, a couple of percentages above where they started that day, I'm going to have to trust the stock market's brain damage and assume Tesla stock is going to continue lower. Hence why I have a put that expires at the end of the week. This put has a break-even price of $205.20. For this option to give me my desired returns, TSLA is going to have to fall below $200 per share. Is that within the realm of possibility for this week? You bet your it is. Do I believe TSLA is worth less than $200? Of course I don't. But alas, I don't control the stock market. I'm just here for the thrills and maybe make a little bread while I'm here.
Well, in the market for a $150,000 electric supercar? Well, BYD's new car may be for you. The U9, released under the Yangwang brand, is hitting the market this year. To break this down for us, we've got Yahoo Finance's Pras Subramanian. Pras, of course, BYD surpassed Tesla as the largest EV maker in terms of sales. That was on the lower end. Talk to me about the strategy competing on the higher end.
Yeah, so BYD, right, in Q4 passing Tesla there with that overall EV sales sort of metric there. But yeah, with this, the Yangwang U9, think of it as Yangwang being like BYD's Lexus in terms of BYD being a Toyota right there. Premium luxury brand there. The U9 there, look the Lamborghini looks, sports car, super sports car there. But the car will have also 1,000 horsepower, so there's no slouch. And it only costs, like you said, $150,000. You know, all the fun aside, this U9 is basically a halo car for BYD. Like as you mentioned, as it takes on Tesla and surpasses them for total EV sales globally.
Yahoo Finance, never going to miss an opportunity to take Tesla down a peg or two. But let's talk about this BYD supercar for a second. I kind of want to compare it to the Roadster, but I don't think this thing can beat the Model S Plaid. I mean, when you look at it, it has a top speed of 200 miles per hour, 0 to 60 in less than 2 seconds. Quickest accelerating car in production today, 1,020 horsepower. So BYD's supercar does less than the Model S Plaid and is double the cost? Get the f out of here.
If at some point they enter the US market, that's gonna be tough. That's gorgeous.
I'm waiting.
I appreciate you always break. I know, right? Because not only for the cheaper ones, but some of these, these incredible supercars here.
I mean, that's 911 pricing there, $150,000. That's a pretty. I mean, I could see that car doing quite well here if it actually comes out.
Well, we shall see.
News anchors anxious for BYD to enter the market in the United States? Are they grandstanding or are they being serious? Either way, like I've said before, it's going to become nearly impossible to keep them from our shores for very much longer. If those Chinese auto manufacturers worm their way in, you might as well start singing Teddy Pendergrass to Ford and GM. Turn out the lights, light a candle for the vigil that will occur for Ford and GM. The warning signs are apparent, but I guess there's other narratives at play.
A year and a half ago, Tesla was driving things higher. And then there was this anticipation that the Fords and the GMs and the Lucids and the Rivians were just going to broaden out of this ever-expanding pie. The reality was, didn't happen that way.
They found out that this as easy as Tesla makes it look.
And Tesla is still the dominant player. They continue to be the dominant player. There are some other names, particularly coming out of China when you start thinking Li Auto and XPeng, and some of those names have done a little bit more okay, but it's regional. What you've really seen is that We got overzealous about this market just completely replacing internal combustion engines and EVs dominating everything on this timeline that was laid out by the most optimistic of optimists.
Man, predicting exponential curves? Who would have guessed that it's hard as f***? And while Tesla is doing their fair share to make this adoption go ever higher, it's gonna take a few more companies experiencing Tesla-level success to see battery electric vehicle adoption take off in the United States. Look at China, for example. They've got startups and BYD pushing the battery electric vehicle trend. Multiple companies have launched them into that 30-35% realm of EV total market share. In the US, we're barely over 7%, with the anticipation of being around 9% by the end of the year. Don't worry, Tesla will get us there. But it'd be nice if Ford, GM used their manufacturing prowess to create exceptional battery electric vehicles. Maybe the number would be significantly higher by the end of the year. But as we know, Ford, GM, they're pulling back on their EV production.
It's really, really hard. Like, look, I'm not going to say Tesla's going to do well or not.
Yeah.
But if EVs do well, it's really hard not to say that Tesla's doing well. It's just so
Sure.
integral to this space.
There's been some disappointment there. The penetration is not quite happening in the way people expected.
And that's the point of the note. And so the EV market's oversupplied versus demand. Global EV momentum is stalling. The firm anticipates Tesla's 2024 outlook to be cautious on volume and profitability rather than wait for what is clearly cautious outlook for 2024. Basically, this is a situation where there was a lot of promises made and things sold by the market commentary. Hasn't happened, and it hasn't stayed on the timetable. So Tesla's delivered largely, but the market itself hasn't had the adoption that people thought it might.
Mag 7, of course, has been leading the market, but there's one big laggard, and that's Tesla. Is it time to take shots again?
So Tesla, this is a good one right here. So Tesla is hovering right on or below a key support level at 210. If it recaptures 210, then I think it's got some upside. If it doesn't, watch out below. It could be headed to below $200. So right now, I'm staying on the sidelines unless it recaptures 210 on a daily closing basis.
Okay, Tesla's one that you've been stabbing at for a while. What has been your approach? Because it has been a laggard in an up market. So do you take profits on small moves? You waiting for a bigger pullback or what?
Yeah, so for me at least, I'm shorting into run-ups, right? So the whole thesis of margins contracting, we know the EV market's now starting to have trouble. We're definitely seeing EV sales fall off a cliff. We know Tesla's been cutting the price on so many of their vehicles, which again is all signals that the EV market is slowing down more significantly.
Forget the fact that the Model Y is the best-selling vehicle on the planet in 2023. That Tesla had a record-breaking Q4 earnings call tomorrow. Can't wait. Forget the fact that Tesla intends to have a compound annual growth rate of about 50% on a multi-year horizon. That's hella growth. And while the margins have been plump and juicy, that's not the goal. The goal is to get as many butts in seats, because everyone that owns a Tesla absolutely raves about their experience, myself included. I can't go back, and I imagine a majority of Tesla owners feel the exact same way. So much, in fact, that they want everyone to have this experience. Tesla can't sell something that they cannot make. The prices are in a direct relationship with their production level and impacted by the demand that they can see in real time via the orders that they get from the Tesla website. It's really amazing that when there's an incremental drop in price, the wait times just go bananas. When they dropped the Model X to under $80,000, we had a delivery date of about a month. We hit that order button and all of a sudden, it was 3 months. I wonder what happened. Maybe some other people saw the price drop and was like, yeah, I'll take a Model X for less than 80 grand. Tesla's ability to play with price in real time is a valuable asset that other auto manufacturers simply don't have.
Favor downside with competition. So for me, it's shorting into resistance and then waiting for a bigger pullback out. You know, something where they flush maybe Tesla down to 100 again before I start to really accumulate on the long side.
Let Tesla get close to $100 again. I may sell this house. In Conclusion. BYD released its luxury supercar, and the news anchors over at Yahoo Finance got all giddy like schoolgirls about it, failing to mention that it pales in comparison to the Model S Plaid, but never missing an opportunity to adjust the crown on BYD's head for selling the most EVs in Q4, taking Tesla's crown apparently. And the EV market is oversupplied? With the exception of Tesla, everybody else is struggling to move their battery electric vehicles, at least here in the United States. And while the financial news media analysts may claim it's a weakening of EV demand, I would posit that it is a weakening of EVs that are no longer in demand. And trying to predict where TSLA will or won't go is wrought with peril. I've been burnt enough with calls so far in 2024 that I have switched to puts. In the meantime, I will also be purchasing Tesla stock at these very, very good discounts. That's all I have for you today. Be easy.